And those oil prices really have plunged. Now, those prices managed to regain some ground after falling to their lowest levels in 5 years on Monday. Both light, sweet and Brent crude added more than $2 in trading after plunging earlier in the day, and this follows a slide late last week. That's when oil reacted to a decision by OPEC to maintain production levels rather than cut output to raise prices.
Now, it's a big concern for some countries that depend on higher prices to actually meet their economic targets. They include Venezuela, Nigeria and Russia, already feeling the heat from Western sanctions.
And we'll bring that diagram back as we discuss this a bit more in depth. The key question is, how will the effects of low oil prices play out in the long term? And what does this mean for us, the average consumers? Well, Chad Brownstein joins us from CNN Los Angeles now to talk about all of this. He's an energy analyst and chief executive officer of Rocky Mountain Resources. Thanks so much for joining us on CNN today. So OPEC essentially says, for now, let the market dictate the price, let's not intervene. But just explain for us why the market is making oil so cheap at the moment.
Well, what you're seeing are cascading consequences of a 7-year supply-side story where there was no view on what demand would look like. So there was over-drilling in the United States, and now we're at a place at $70 a barrel or less that the consumer is going to benefit, but long-term, there's now a concern amongst the secondary and tertiary markets within OPEC that they can't sustain balancing their national budgets with the price being stagnant in the 70s.
And that's what this essentially comes down to. It's which nations are more exposed financially to the fluctuating oil prices. Those relying heavily on exporting oil could suffer here, right? We're talking Russia, Nigeria, Venezuela. But which nations do you think face the highest risk and which ones not so much? And just so you're aware, we're looking at this diagram which shows us the break-even point for many nations when it comes to the cost of a barrel of oil.
Sure. Well, you're seeing quite a competition between the United States and Saudi Arabia and the United Arab Emirates, where they're challenging the U.S. to lay down rigs, and the U.S. is challenging the OPEC secondary and tertiary markets like Iraq, like Kuwait, like non-OPEC but close members like Russia to challenge where we are as far as production is concerned. And what you're going to see is much more a Sunni versus Shiite model of warfare when it comes to using oil as an economic weapon. You're going to see the countries in the Middle East challenging each other, and you're going to see ultimately China benefiting the most because they now don't have to look for production in other places. They're happy to import oil at $70 a barrel. Their manufacturing costs are going to be down, and this is the best news they could have had.
Wow, so China may benefit from all of this. But is diversification another lesson here? If you look back to the 80s when Mexico faced a debt crisis because of the plunging price of oil, it actually spurred other industries there, so the government could rely on other sources of income. Might what's happening now cause this to happen elsewhere?
Well, it's interesting as it relates to the pipeline through the United States. It was so focused by the legislative arm of the government. Keystone should be passed now. We don't have the luxury of $100 oil. We need to create hundreds of thousands of jobs in the United States. It'll spur production even at $70 a barrel. In the United Arab Emirates, they reaffirmed their $20 billion capital commitment and allocation of private equity. So as far as diversification's concerned, the U.S. and the Middle East are balanced, specifically the Saudis and the United Arab Emirates, but it's very important to diversify, and certainly the U.S. and the Saudis are best positioned. When you look at Venezuela, which is, I'm sure, based on your chart, way underwater on their economic budget as far as balancing, they need to be challenged to diversify. You're looking at Iran, which is in big trouble for diversification purposes. Yeah. It's going to cause many rogue waves as it exists in the world economy.
And just for the few seconds I have left, oil is at around $70 a barrel now. When do you think it will get back to 100?
I think 75 to 77 is the new 100. It's the new standard by which the U.S. operators are going to have to view their drilling strategies. You're going to see probably 9 million barrels a day run through 2015, but you're not going to see an immense amount of new drilling that exists outside of the key shale markets of the United States. You're going to see the mid-70s around for a long time.
This could generally be the new normal. Chad Brownstein there joining us from CNN Los Angeles, energy analyst and chief executive officer of Rocky Mountain Resources. Thanks for joining us tonight here on CNN.
All right, well, that's going to be interesting for a lot of people with their vehicles,
A lot of people.
isn't it?
Oh, yeah.
We'll see.